In this video, I'm going to discuss PFICs and the major problems and pitfalls with having a PFIC as an American living in Canada. Having a PFIC will complicate your tax returns and potentially subject you to extra taxes. This is something that should be avoided. Stay to the end of this video to find out the true rules that determine whether something's a PFIC or not. Also, we'll discuss who needs to file a PFIC statement. As a cross-border advisor, portfolio manager, and co-founder of Swan Wealth Management, I help my clients optimize their investments so they can have a work optional lifestyle. Many people have come to us after investing in PFICs, and this has caused a problem for them, a tax problem and additional filing. We assist in making sure that they're not in these investments and can get out of those that they own. First, let's discuss exactly what PFIC stands for and a couple of examples of what PFICs are. PFIC stands for Passive Foreign Investment Company. Types of PFICs in Canada are mutual funds, exchange-traded funds, Canadian exchange-traded funds, not US exchange-traded funds, and money market funds. My clients living in Canada, who are also US persons, often ask me why avoiding PFICs is so important. Well, the main reason is that you're going to have to file extra forms. You file an 8621, and as well as filing the extra forms, or as long with filing these forms, is extra accounting fees. After hearing about the PFIC rules, you may think it's a simple thing to file the PFIC forms on your own. The truth is, it's an extremely onerous process. We've had clients who've tried it, and they report back it's taken them in excess of 30 hours to get through the complexity of the form, and they're still not sure if they did it right. This is something that an accountant would do much better for you. It's even better, though, to avoid PFICs altogether. So how do you get around PFICs? The first thing to do is make sure you're dealing with an investment advisor who understands the cross-border, preferably somebody who's licensed cross-border and doesn't get you into PFICs. It's safest to invest in stocks that are traded on an exchange. Avoid Canadian mutual funds, avoid Canadian exchange-traded funds. Even some items or some investments that trade on exchange are PFICs, such as real estate investment trusts, so it is quite tricky to avoid if you're doing this just on your own. Occasionally, I have clients come to me and say that they'd like to own a Canadian mutual fund or a Canadian exchange-traded fund. And generally, when we discuss it, the reason is they feel somehow that the mutual fund is safer or the ETF is safer than investing in individual stocks and other investments. The truth is that we can replicate exactly what they're doing and build out generally what's either an equal or a better portfolio using similar investments that would be in the mutual funds without holding the PFIC. Next, if you want to avoid PFICs, you need to know the rules. There are essentially two tests. The first is the income test. If 75% of the gross income comes from passive or non-business activities, then it is a PFIC. Next, there's the asset test. If 50% of the company's average assets are involved in producing passive income, then the company's a PFIC. When your accountant is doing your taxes and sees the forms coming in, he or she will quickly recognize if you're invested in PFICs or not, while a good financial advisor will make sure that you're not invested in PFICs. If you're a US citizen or a long-term green card holder and invested in PFICs, you'll need to do the IRS Form 8621. Also, if you're a Canadian and you've spent more than 183 days in the United States, you may have to do an 8621. A lot of headaches and tax traps can be avoided with the proper advice and planning. If you're planning a cross-border move or already an American or US person living in Canada experiencing cross-border issues, please give us a call and book some time with a Swan Wealth cross-border expert, and we'll help you with these issues. Thank you so much for watching, and we will see you in the next video.